Hey everyone, and welcome back to the channel. Today, we re-tackling a big question I get all the time. How can I make my first $1,000 from the stock market? It sounds like a huge milestone, and it is, but it's more achievable than you think. This isn't about some get-rich-quick scheme or a lucky gamble. This is about building a solid foundation to grow your wealth steadily. So if you're ready to learn the real way to earn that first $1,000, stick around. First things first, let's talk about mindset. This is the most crucial part, and it's where most beginners go wrong. You have to shift your focus from chasing quick profits to building consistency. The stock market isn't a casino. If you come in thinking you'll double your money overnight, you're more likely to lose it all. Making your first $1,000 is a marathon, not a sprint. It requires time, discipline, and a clear understanding that you are investing, not gambling. Your goal is to build wealth brick by brick, not to hit a jackpot. Before you even think about putting a single dollar into the market, you need to learn the basics. It's like trying to build a house without knowing what a hammer or a nail is. You need to understand fundamental concepts. What is a stock? It's a piece of ownership in a company. What's an ETF? It's a basket of stocks, kind of like a pre-made portfolio, which is great for diversification. What are dividends? They're your share of a company's profits, paid out to you just for holding their stock. You also need to grasp market cycles, the natural ups and downs of the market. And critically, you must know the difference between investing, which is long-term ownership, and trading, which is short-term buying and selling. We have a whole beginner's guide on the channel that breaks all of this down, so be sure to check that out after this video. Once you have the basics down, it's time to choose a simple strategy. Don't overcomplicate things. The best strategy for a beginner is one you can understand and stick with. For most people, long-term investing is the way to go. This involves buying and holding quality assets for years. A fantastic way to do this is through index funds, which track a whole market index like the S&P 500, or by investing in blue-chip stocks, which are large, stable, and well-known companies. Another popular strategy is dividend investing. Here, the focus is on buying stocks that pay regular dividends, creating a steady stream of cash flow that you can either use or reinvest. Now, there are other strategies like swing trading, which tries to capture short-term price movements. But be warned, this is a much higher risk approach and generally not recommended for beginners. Start simple, build your foundation, and you can explore more complex strategies later. A common misconception is that you need thousands of dollars to start investing. That's just not true anymore. You should only ever start with an amount you are completely comfortable losing. This is your learning money. Whether it's $100 or $300, the important thing is to just get started. Thanks to fractional shares, you can buy a small piece of even the most expensive stocks. The power of starting small is that it allows you to learn the process without the emotional stress of risking a large sum. With patience and consistent reinvestment, even that initial small amount will start to grow and build momentum. The journey to your first $1,000 in profit begins with that first $100 investment. All right, you've got the right mindset, you've learned the basics, and you have your starting capital ready. The next practical step is to open the right brokerage account. This is your gateway to the stock market. The most important factors to look for are regulation and low fees. Make sure your broker is regulated by the proper authorities in your country. This protects you. Next, look at the fees. High fees can eat away at your returns, especially when you're starting small. Look for brokers that offer zero commission trades. You should also ensure the broker gives you access to the markets you want to invest in, like the U.S. or other global markets, and that they support fractional shares, which we just discussed are a game changer for new investors. Now for the fun part. What should you actually invest in? My advice is simple. Invest in strong, proven companies. Look for businesses that you understand, businesses that have a solid track record of increasing revenue and profits. A company with strong, visionary leadership is also a huge plus. The big mistake to avoid here is chasing hype. You see certain hot stocks being promoted all over social media and in the news. They promise explosive growth, but they often come with extreme risk and volatility. Instead of following tips from a random online forum, do your own homework. Focus on companies with real products, real earnings, and a long-term competitive advantage. Boring can be beautiful and profitable in investing. This next step is where the magic of compounding really kicks in. Reinvest your profits in dividends. When you make a small profit from a stock going up, or when a company pays you a dividend. It's tempting to take that cash out and spend it. But if you want to reach that $1,000 goal, the smartest thing you can do is put that money right back into the market. This is how you create a snowball effect. Your initial investment earns a return, and then you reinvest that return, which then starts earning its own return. Over time, this process can dramatically accelerate your wealth building. Most brokers even have a feature called a dividend reinvestment plan, or DRIP, which automatically does this for you. Turn it on. Let compounding do the heavy lifting for you. With all this talk of profit, we can't forget about risk management. This is absolutely non-negotiable. The number one rule is to never invest money that you need for your daily life or for an upcoming expense. The stock market is for long-term growth, not for your emergency fund or your rent money. Secondly, you need to manage your position sizing. This just means not putting all your eggs in one basket. Don't invest your entire portfolio in a single stock, no matter how confident you are. Diversify. And finally, you have to learn to control your emotions. Fear and greed are the two biggest enemies of an investor. Don't panic sell when the market drops, and don't get greedy when a stock is soaring. Stick to your strategy, not your feelings. Patience is a virtue, and in investing, it's a superpower. Making your first $1,000 won't happen overnight. It's important to set realistic goals and timelines. Track your progress. This doesn't mean checking your portfolio every 5 minutes. That will just drive you crazy. Instead, maybe check in once a week or once a month. Review your performance. What worked? What didn't? Every investment, whether it's a winner or a loser, is a learning opportunity. Don't be discouraged by mistakes. Even the best investors in the world make them. The key is to learn from them, adjust your approach, and keep moving forward. Your journey to that first $1,000 is a process of growth, both for your portfolio and for you as an investor. Finally, the journey never really ends. To be a successful investor, you must stay educated and consistent. The market is always changing, so you need to keep learning. Follow reliable financial news, read company earnings reports for the stocks you own, and continue to refine your strategy as you gain more experience. Subscribe to channels like this one that aim to provide real, actionable advice. Consistency is the thread that ties all of this together. Consistently saving, consistently investing, consistently learning, and consistently reinvesting your profits. That is the true secret sauce. It's the small, disciplined actions you take every single month that will ultimately lead you to that first $1,000 in profit, and then to the thousands that come after. So, that's the roadmap. It's not a secret trick, but a proven strategy. Start with the right mindset, learn the fundamentals, choose a simple plan, start small, reinvest your gains, manage your risk, and stay patient and consistent. You can absolutely do this. Your first $1,000 from the stock market is waiting for you. Thank you so much for watching. If you found this video helpful, please give it a thumbs up and hit that subscribe button for more content to help you on your financial journey. Let me know in the comments what strategy you're going to start with. I'll see you in the next video.